Have you ever wondered why some people seem to effortlessly grow their money, while others struggle just to keep up with inflation? What if I told you there's a way to put your money to work without needing a finance degree or spending hours analyzing stocks every day? Today, we're diving into the world of mutual funds, a powerful, beginner-friendly investment vehicle that can transform your financial future. Imagine pooling your money with thousands of others to buy a diversified basket of stocks, bonds, or other assets, all managed by experts. That's exactly what mutual funds do. But how do you get started? What should you watch out for? And how can you make the most of them? Let's break it down step by step. First, what exactly is a mutual fund? Think of it as a big money pot where many investors combine their funds. This pot is then used by professional fund managers to buy a mix of investments, stocks, bonds, or other securities, based on the fund's objective. Instead of buying individual stocks one by one, you own a small piece of this entire portfolio, spreading your risk. Why is diversification so important? Imagine you bought stock in just one company. If that company hits a rough patch, your investment could tank. But if you own pieces of 100 companies, the bad performance of a few is cushioned by the good performance of others. Mutual funds do this for you automatically. Now let's talk about types of mutual funds. There are broadly three categories: equity funds, bond funds, and balanced funds. Equity funds invest mostly in stocks and are great for long-term growth, but come with higher risk. Bond funds invest in debt securities. Think loans to governments or companies, and are generally safer, but offer lower returns. Balanced funds mix both to give you a middle ground. How do you pick the right one for you? It starts with your financial goals and risk tolerance. Are you saving for retirement in 30 years? An equity fund might be suitable. Need a safer investment for money you'll need in a couple of years? Consider bond funds or balanced funds. Always ask yourself, how much risk am I willing to take, and when will I need this money? Next, fees. Mutual funds charge fees called expense ratios, which pay the fund managers and cover operational costs. Even a small fee like 1% can eat into your returns over time, so look for funds with reasonable fees. Index funds, a type of mutual fund that tracks a market index like the S&P 500, usually have lower fees and are a great choice for beginners. Let's make this practical. Say you invest $1,000 in a mutual fund with an average annual return of 7%. After 10 years, that investment could grow to nearly $2,000. If you add $100 every month, your portfolio might be worth over $16,000 after 10 years. That's the power of compounding, your returns earning returns. But beware of common mistakes. One is chasing hot funds that have recently skyrocketed. Past performance is not a guarantee of future results. Another is ignoring fees or not understanding what you're investing in. Always read the fund's prospectus to know the investment strategy, risks, and fees. Also, avoid jumping in and out of funds frequently. It can cost you a lot in fees and lost growth. How do you actually buy mutual funds? Many brokerage platforms and investment apps let you buy shares easily. You can start with small amounts, sometimes as low as $100. Set up automatic contributions to stay consistent and take advantage of dollar-cost averaging, buying regularly regardless of market ups and downs. And remember, mutual funds are designed for the long term. Don't panic if the market dips. Stay focused on your goals and review your portfolio periodically to make sure it still fits your needs. So, what's the big takeaway? Mutual funds are an accessible, diversified, and professionally managed way to grow your money. They're not magic, but with patience and smart choices, they can be a key building block of your financial success. If you're curious about which mutual funds to consider, how to analyze them deeper, or want tips on creating your own investment plan, drop your questions in the comments. Share this video with friends who want to get started investing, but don't know how. And if you want more simple, practical investing tips, hit subscribe and turn on notifications. Your money has the power to grow. Let's make sure you're putting it to work the right way. Thanks for watching, and I'll see you in the next video.